control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, welcome to the webinar today. This is Henry from ElliottWaveForecast.com, and I hope all of you are doing well, guys. Now, before we start, can someone please kindly let me know if the audio and video is all okay with you? Can you see the screen and the audio is fine? Okay, great. Thanks for the confirmation, guys. Okay, guys, so we got about maybe around 1 hour, right, to talk about the topic of the uranium, right? Now, we are focused mostly on the technical aspect of it, right? Because we are a technical forecast company, right? We provide technical analysis using the Elliott Wave technique. So I'm assuming if you join today, you have some ideas. Maybe some of you already have some ideas about this uranium industry, right? So you might have already done some research about the investment thesis and things like that. So I won't talk too much about the fundamental aspect of it. I'm going to talk about it a little bit, but towards the end of the presentation, I will talk more about what I see from the technical point of view, right? Because I'm sure there's a lot of presentation or writing that people make about the uranium, right? So I think if you do a little bit research, you can find more information about it. I have already, I included some of them. You can find the PDF file, by the way, of this presentation today. You can download it. So you can keep that. You can go along with me as I go over the slides. But yeah, we're going to talk a little bit about some of the fundamental aspects of the uranium industry, and then towards the end, we're going to take a look at the charts, right? The Elliott Wave charts of some of the ETF and the company, and maybe that's what you're looking for, right? With the presentation today, right? Okay, so that's basically the plan for today, guys. All right, and with that, I think we can start the webinar today. All right, so before we start, again, this is something that usually, we have the legal disclaimer. The information that you found here, including ideas, opinions, prediction, forecast, that is for informational, entertainment, educational purpose only, and should not be considered as personal investment advice, right? So we believe that, attempts have been made to make sure that the information is accurate, but it can include some errors or inaccuracies. And you need to do your own due diligence, consult licensed financial advisor before making any and all investment decisions. All right. Okay, so a little bit of introduction about uranium. Can I ask you guys, is there anybody, are you familiar with this uranium industry at all? Who is completely new and who has some ideas about this industry before? If I just get some rough ideas about the my audience here, are they already familiar with the uranium industry or kind of new? Okay, so I see some people answering have some ideas already since the last run years ago. Okay, great. So yeah, seems like yeah, Canadian. Yeah, of course, Canadian uranium is extremely important. One of the producers, right? Okay, great. So some people definitely got some ideas already. Okay, so some people are familiar, but not as an investment um, potential. Okay, so yeah, so we're gonna talk about how do you, if you want to participate in this uranium industry, then how would you be able to do it? And we're gonna talk about it as well at the end. Okay. All right. So uranium is basically quite abundant in nature, right? It's a naturally occurring element. It plays a central role in the generation of nuclear power. It offers a cleaner, more sustainable alternative to traditional fossil fuel like coal or natural gas that produce a lot of carbon emission, right? So uranium is a cleaner alternative. So amid growing concerns of climate change, it stands out. Nuclear is one of the low carbon option, right? There are some other options like hydro, what is basically using water, wind, solar, right? So those are some other options. Now I think the unique thing about nuclear uranium is that if you use solar or hydro and so on, is in one way you depend on, it's not totally dependable. Like for example, if you use solar, it depends whether you have sun, right? So if you use wind, it depends on whether you have wind. So so you are depending on something that you cannot control in a way. But in with the uranium, with nuclear power, then actually you don't have that kind of problem. You don't have to depend on something that is outside your control. All right. So it is one of those options, therefore, as a low carbon energy, contributing significantly to the reduction of greenhouse gas emissions. The global shift towards sustainable low carbon energy sources will be a key driver to the demand for the uranium in the future. Okay, so that's just a quick introduction. Like I said, it's just a brief thing on the fundamental aspects of it. We're going to focus more on the technical aspect at the end of the presentation. All right. So this is just a very quick sort of illustration of how uranium goes from being mined, right, from the earth and being used as a nuclear fuel, right? So it started from the exploration. So basically the exploration companies drill to find the mineable deposits of natural uranium, and then from the exploration it goes into the mining. So the miners extract the natural uranium from the ground. This is, I believe, it's called U308. So there are two isotopes in uranium, U308 and U235, right? The natural uranium that the miners mine carry that U308 almost like 93% or something like that. It's basically U308. So they mine it through underground open pit in situ recovery mining. So once they mine it, they go into the milling and conversion, right? So the mined uranium is chemically treated to form yellow cake, which is then converted into gas. Then after the conversion, it goes into the process of enrichment. Now this enrichment here is basically, it increases the percentage of this U235. So the process of the enrichment is to make what used to be a low percentage of U235 in the natural uranium, and then they increase the percentage so they can be used as a fuel, nuclear fuel, right? So it goes to the enrichment process, enriched by uranium-235 in a fast spinning cylinders and converted to powder. Then after that, it goes into fuel fabrication, right? So the enriched uranium, and then it's packed into ceramic pellets, then loaded to fuel rods, and then this fuel rods being is then going into the nuclear reactors and produce the energy, right? So then it produces electricity. So the nuclear reactors use uranium fuel to generate heat through fission. So again, the one that can produce this fission is this U235 isotopes. So that's why you need more of this U235 in the fuel rods, so that it can be used to generate heat through the fission, right? and then it turns the reactor's water into steam, generates electricity from steam turbine. So this basically is the process from the exploration stage all the way until it is used into producing the electricity, right? So that's the cycle of the uranium. So this is just a quick kind of overview of the demand and the supply right now. In terms of the demand, currently there are around 436 reactors globally, and then around 173 more is planned or under construction right now. So you can see there's a lot of planned and under construction reactors. Now, I think there is some kind of hiccups after the Fukushima. I don't know if you guys remember, there is a tsunami in Japan, the Fukushima nuclear disaster, right? So basically the plant shut down because of the flood from the tsunami, and then because of that, a lot of countries getting scared, and then they, like Germany for example, introduced a bill to phase out all this nuclear power in their country. I believe they do it in 2011. They want to phase it out, but then now the technology is getting better and better, right? And I believe even the current technology is going to be able to withstand sort of like tsunami, things like that already. So I think you can do more research on that, like what is the actual risk of uranium compared to all the other alternatives like the coal or or other fossil fuel. And based on what I see, the risk of uranium is not really higher than all those other alternatives like the fossil fuel. In fact, it is actually smaller in terms of the risk. So, but you can do more research on the risk of that. But basically, what happens now is that a lot of countries now trying to catch up, and with the war between Russia and Ukraine, right? And then the U.S. and the European kind of placing sanctions over Russian's oil, right, as well as the natural gas, and that caused the price of this oil, natural gas, and all this thing to go up, right? To go up, and therefore, when you have this cost of such an important thing, the energy going up so much, it basically kills a lot of the industries in those countries. So that's why a lot of countries now looking for alternatives, right? Like it's okay, and then they also want to go greener, which is more environmentally friendly. So what are the alternates? So that's why uranium is getting a second look right now, and countries start to realize that they shouldn't completely phase out because technology is getting better, and yeah, so they start to look into uranium more and more right now, and that's why you can see right here 173 more planned under construction, and this is the three countries that currently represent the biggest sort of demand, which is the United States, China, and France. They three of them combined at 58% of the demand right now. All right, so here we can see the supply gap. So you can see right here that the demand is being represented by this green thing here, this green color, and then the production is represented by the blue. So you can see actually the production is forecasted to decline, right? To decline, and then you got a massive imbalance as the demand starts to go up, and then the supply is kind of going down. Then you have this supply gap that will only, I mean, if you have such a massive supply gap, then basically the price has to increase because you don't have enough supply to satisfy the demand, right? So you can see that this is the forecast going all the way to 2040, that we will have a 74,000 metric ton supply gap. So the supply gap is going to persist even as of now. There is already a supply gap, but even down, years in the future, you can expect even more supply gap because the demand keeps rising as well. So here are some of the countries that produce uranium. So in 2022, Kazakhstan, Canada, Namibia, and Australia produce over 70% of the world's uranium. So these four countries basically are the key countries for the uranium industry, right? And Kazakhstan's being the biggest one, and the biggest company here is called Katasomprom. I don't know how to pronounce it, but it is traded, unfortunately, in the Germany stock exchange. So I believe you can try to buy in the US as well, but I think it's over the counter, not like directly traded in the US exchange. Okay. And then you can see Canada is a big player here, and then Australia is also a pretty big player. Now Russia is also not too bad. You see it's 2.5 metric tons, but then there is a risk here, like so you can see that geopolitical risk, that sanctions on the Russian uranium services can cause the supply to basically disappear from the market and exacerbating the supply gap, right? So because I think a lot of the Western countries want to get rid of the dependence from the Russia, so they want to also try to find ways to basically skip this supply from the Russia, but so that's if they apply sanctions on Russian uranium, then that can cause even more gap in the market. And then there's another potential supply disruptions, Kazakhstan, caused by possible blockage of the transportation routes passing through Russia, right, because of the war. But now I think the war is kind of getting into kind of conclusion. It's not getting worse, so maybe it won't be that big of a deal. This one, hopefully, right? And then there is another potential problem here: a halt in exports from Niger due to the government coup. Okay, so there's a lot of other than Canada, you can see there's this other country and Australia, of course, but Australia and Canada both combine around 10 metric tons, which is also significant, 10,000. But like some other countries here, the supply are kind of prone to some sort of problems, right? Like there's a war in the Russia or something else, then there could be some disruptions in the supply that will cause the supply to get affected. Okay, so these are some of the overview of the biggest uranium producers right now. All right, so now how would you invest in this space, in the uranium space? So there are a couple of different ways that you can try to invest. One is through the uranium futures. This is called the UXC. Right now, UXC, uranium futures, by definition is a leverage product. So that means it is a little bit risky because you need to know what you're doing. You can lever your capital. So basically, if you're wrong, you can end up losing money. You can lose all your money, for example, because you're using leverage, right? And also with the uranium futures, typically you buy a contract that will expire on certain date, so it's not like something that you can buy and hold, right? Unlike if you buy the ETF or you buy the stocks, right? Like company or miners, uranium miners, that you can just buy and hold without any leverage, and then you just keep it as long as possible. With the uranium futures, you have to specify the contract expiration date. So that means you cannot keep holding it forever, right? You cannot hold it as long as you want. So it's more like a specific date, expiration date, and then also leverage product as well. So this one is a little bit if it's more risky actually compared to these other three options. But I start with the uranium futures first, because when you see the price of the uranium getting quoted, typically they quote it from this one, like what is the price of the underlying the uranium, right? This is typically what they are quoted, the UXC here, and that's why this one is the first one that I want to look at. Uh, but then other than the uranium futures, you also have several other options. Now the second one is the physical uranium. Now of course you cannot buy a physical uranium and store it yourself, right? It's impossible, and most people will not do something like that. So there is an ETF or trust here. Now this is, I think this is not traded in the US, but this symbol here is over the counter. It's like a fund basically, right? Sprott is from Canada, right? He's very well known in the precious metals. Eric Sprott in the precious metal as well. Now he's going into uranium space as well. So he created this physical uranium trust. I believe this is new product. I think probably no more than 3 years, maybe even less than 3 years old, right? So if you buy this thing here, you basically buying the physical uranium, but you don't store it yourself. So you basically use Eric Sprott's company to buy on your behalf, store it, so they have the storage, right? And of course you will have to pay some sort of fees for that, so that is already included in the price when you're buying this as SRUUF, right? But this is another way for you to buy the physical uranium without you having to actually store it yourself, which is not possible to begin with, right? So this is another option, which is also possible for you guys to do it. All right, and the third one is the ETF. Now the ETF probably is more popular. This is traded directly in the exchange. This symbol is all traded in the US exchange, right? The ETF, exchange traded fund, offers a diversified exposure to the uranium market. So by buying this ETF, you basically diversify all your holdings depending on which ETF you buy. There are several big ones or popular ones. The first one is the URA. This is the older ETF here. This is Global X Uranium ETF. Now what I like about this URA here, now this is something just like stock, you can buy and hold, right? It's ETF product, right? So you don't need to use leverage, right? So you can just invest and then just hold it, put it in your account, for example. Now what's good about the URA here is it is actually investing in the actual physical uranium. So it has some components invested in this Sprott Physical Uranium Trust, but it also invests some percentage into some of the biggest uranium companies, miners. So in a way, you get a full diversified position in the uranium space. You also you invest in the physical uranium as well as these companies here, right? So this is the most diversified among all the other options, I believe, right? So I think the big one is either URA or the URNM. Now the URNM is a newer ETF. Also, the Sprott made it because, like I said, Sprott just jumped into the uranium space not too long ago. I believe not more than 3 years ago. I could be wrong, but you can check it. Very new. It's also very as new as this one, the Physical Uranium Trust. Now he is very well known, and his name is quite popular and credible. So that's why a lot of people trust him, and basically this name here get also a lot of exposure when people talk about uranium space. This is a valid option here for you guys. Now with the Sprott Uranium Miners ETF here, this one invests only in the miners. So it invests only in some of the biggest miners, which is this one, like Chemical, Kazatomprom, PHP, NextGen, and many others. So basically, when you buy URNM, you are effectively diversified already with many different miners that is in the uranium industry. Okay, but the difference between this one and the URA is that the URNM is only investing in the miners, right? The companies that mine the uranium, but it doesn't invest in the actual uranium, the physical uranium. So this one therefore is more diversified. Now because most of the time the miners uh, have some sort of leverage compared to the underlying uranium. That means you can expect in a bullish market, okay, in a bullish market, you can expect URNM to actually outperform the URA, right? Because this, in a bullish market, and if you believe the case for uranium is strong, and then it will keep rising in price, when the underlying uranium price increase, like the uranium futures, right, when the underlying uranium increase, then with that increase the miners will increase more than the underlying, because it has a leverage from the underlying. And that applies to all the other thing as well, like oil versus the companies producing oil, right? Or gold, silver versus the gold miners, silver miners. The miners always have the leverage compared to the underlying. So that means if it is bullish, then you will have the miners rising more. But if it is bearish, the other side also happens. It will drop a lot more compared to the underlying as well. All right. Let me see. There's a question there. How deeply? You mean like all the fundamental? The fundamentals is all based on the research, right? Like I said, we are not a we are basically a technical service company, right? We analyze market, stocks, and so on using Elliott Wave. So we are not really focusing too much on the fundamental aspects, but all this thing is for your information, right? So that's why I'm also giving all this as information for you guys. But then I think the focus is more towards analyzing using the Elliott Wave. All right. And then the other option is the Fennec Factors Uranium plus Nuclear Energy ETF. I think this one is the least popular, I believe, compared to these two here, right, in the ETF space. Then other than that, other than the physical and then the ETF, then you can also invest in the uranium stocks itself. So you can invest in some of the biggest one, Chemical, Kazatomprom, but this one is not traded in the US here. It has to be over the counter if you're in the US. This one, BHP, Next Gen Energy, and so on. So all these are some of the biggest players in the uranium. And this one, URNM, URA, this one, they also include all this thing here in their fund, right? So if you don't want to bother doing your own research, like, oh, what should I invest, which uranium miners should I buy, and so on, then you just buy. The easiest way for you guys to get exposed to uranium and well diversified without the risk of, you know, like going to zero if they go bankrupt and things like that, is basically buying the ETF. To me, this is the easiest one for you guys to get involved. Now, I think within the ETF, then basically these two here are your best options, depending on what you are looking for, or maybe you can just invest in both of them if you want. But there is an overlap. Like I said, both a lot of the companies in the URA is also in the URNM. So there's an overlap, and the only difference between the two is that the URA invests also in the physical uranium trust here. I forgot exactly how much in terms of the percentage, but I think if you Google it, I think it will let you know very quickly what is the percentage of the. Let me do it right now if you want to know URA component, right? Okay, so here I just Google it here. What are the holdings of URA? So there's a Chemical 24%, the Sprott Physical Uranium Trust, so 11%. So 11.4% is being invested in the physical uranium, and then the rest is basically in the companies, right? So that's the difference, the big difference between URA and URNM here. Okay, so that's basically very quick overview, guys, about the uranium market, and also how you can participate in the uranium market if you want to invest. Any questions so far before we actually look at the technical analysis of the of some of this instrument here using the Elliott wave. So if you look at the handout that I give you guys, you can see that I have charts here. This is not the I mean, I prepare actually more than just one time frame charts, but I give you the biggest time frame chart here, right? Like the monthly or the weekly. So you can see this is the uranium futures, and then this is the URA, which is the ETF, right? And then this is the URNM, which basically the two of this, the URA, URNM, are the best two ETF that you can buy to participate. And then also, if you want to buy directly in the companies, then this one are some of the biggest one: Chemical, CCJ, and the Next Gen. Now I included here is for your handout, right? But we're gonna switch to my e-signal actually to look deeper into this chart here, but this one is just for your reference only, so you can keep it, the handout. But I'm gonna go to the e-signal now because I have prepared several different time frames, so we can actually drill down to the lower time frame and take a look at the lower time frame as well. Okay, so we're gonna start with the future first, because that's usually what they quote as the price of uranium. So let me see where I got it. So the futures actually is not available in e-signal. I have to do the analysis here on the trading view. Okay, so this is the UXC, which is the uranium futures, right? Again, you need to specify specific contract if you want to trade this. So I only got data here all the way back from 2008, right? I don't have anything before that, so that's what I'm going to be using. And this is the monthly time frame. So this low back in 2016 at $17, I'm labeling this as a wave 2 in the super cycle degree, right? Remember, the Elliott wave has several different cycles, from the grand super cycle, which is basically consists of decades. The move can last into decades, all the way to the sub-minuet degree. There are 9 different degrees to basically indicate what kind of move is this. Is this like a decade move, yearly move, monthly move, weekly move, 4-hour move, and things like that. And this is the super cycle because it's pretty long here. You can see from 2007 all the way to 2016. So this is almost like a 9-year move. You can see it keeps dropping non-stop. Now this is understandable because, again, I think the event that caused all this drop is that Fukushima, the Japanese nuclear disaster. I believe that one was, anybody remember what year that is, the Fukushima disaster? Let me see what the exact year for that. The accident here was on 2011. Yeah, 2011. So you can see that's why from 2011 it just kept dropping and dropping, right? So I label this drop here as a 3 swing. So this is what we call a double zigzag. So ABC is a zigzag. So we have 2 sets of ABC here, ABC and another ABC. So that's a 2 zigzags. And the entire thing form a double zigzag labeled as a WXY. That's a corrective structure here. Now the idea that this 2016 is a major low is pretty reasonable, guys, because this is the logic, right? If let's say I'm bearish, right? Let's say I'm bearish the uranium, let's say, and okay, what if it doesn't rally? What if starting tomorrow it drops like this and it breaks below the 2016, right? Just assume for a second, we're gonna assume this is gonna drop. Now the problem with this analysis is that if it breaks below this 2016 low again, right? So technically you have what we call a lower low sequence, right? Even if you don't understand Elliott wave, this is not really too difficult. A lower low sequence simply is basically saying that, okay, so from this peak to this 2016, right, you got this leg here, right? So yeah, within this move, within this 9-year move, you have up and down, up and down. Yes, you've got some up and down, but you consider this entire move as one swing or one cycle, right? That's why this is one with 1 in the super cycle, and the low here is with 2 in the super cycle. So this is considered to be the same cycle. It's a with 2 cycle, super cycle, right? And then from here you got a rally, and obviously this rally is completely different than this move down, right? So if you can say this move down here, this rally here is part of the same cycle, this little move up, little move up, little move up, this is still part of the same cycle from 2007 all the way to 2016. But this move up here, you cannot say it's still the same cycle, right? Clearly not, because the size of the rally and also how it breaks above. If I try to draw a bearish channel, it breaks above it. So that means this is a new cycle. So if we assume it's going to drop back and drop below 2016 low again, what this is suggesting is that you got a lower low sequence. So you got 1, which is the same cycle, and then 2, which is another cycle, and then you got 3, which is yet another cycle that breaks below this previous low. Now in that kind of scenario, the way you look for the target lower is using the Fibonacci extension. So from the peak to the low is your first swing, and then you project it from the point where it breaks down. So in other words, if I do that, right, and let's say I'm trying to find what the 100% extension is, and so on. Now you can see in the 100% extension. Let me see what this is. Oh, I use the logarithmic. I'm going to use the regular here. You can see in the 100% extension here, right? So this 100% extension here basically is saying that, okay, if I drop again and breaks 2016, I go to the same length, right? The same length as the first leg. So this is your first leg, this is your second leg, and then this is your third leg. When the third leg equal in length to the first leg, it will go to negative $46. So that doesn't make any sense, because you cannot possibly have uranium going negative. It will always have some values, right? Because this is commodities. I mean, you cannot just have a negative number. It will not go to 0 either, because there is always going to be some values. So that means most likely then, based on you can say it is running out of space on the downside, right? It's running out of space because you cannot possibly go much lower than that. Because the implication of breaking 2016 is going to go to negative number, which is not possible. So then you can conclude that actually this 2016 low here is a major low. That's why we call it a super cycle low. That's a big low in a super cycle degree, which is almost at the highest degree, right? The only higher degree than super cycle degree is a grand super cycle, right? I don't use a grand super cycle because I want to have more space, because if I call this grand super cycle, then when I have a full completed 5 waves, I run out of degree because I already used the highest degree already in the chart. That's why I always start with this is for you if you know Elliott Wave. When you try to label, you don't use the grand super cycle most of the time because you want to have more space down the road in the future, so that you can use the grand super cycle degree, right? If you use it already, then when you have a completed 5 waves, you don't know what it will end, because you cannot end a grand super cycle degree and then find another degree that is higher than a grand super cycle, if you know what I mean. So you always start with at least one cycle lower than the grand super cycle. So from here we start a new leg, and that leg must be impulsive. Because like I said, it cannot be corrective, guys, because if it is corrective, you're implying it will go down and break below 1740 again. But like we are showing, that doesn't make sense. It doesn't make sense to break. So therefore you label this rally as an impulse, right? Now you can see right here, so far you see, if you focus on the bigger swing, Then I see 1, 2, 3, 4, 5 swing. That's what I see from the low in 2016. So I'm labeling this as a 1 2 1 2, which is what we call a nest. So we are currently within wave 3 of 3. So that is, in Elliott wave theory, that is considered to be the strongest phase of the rally, because you are in the wave 3 of 3, which is supposed to be the strongest phase of the rally. So we are in the wave 3 of 3 right now, which should continue to go up. Now I want to try to drop into the lower time frame from the UXC, but the problem is when this is a monthly, right? When I try to go to, let's say, the weekly or the daily, the weekly is still okay, but I was trying to go to the daily and the 4 hour. Yeah, you see suddenly this bar here, it doesn't look good anymore. Look at this. It's kind of fading, right? I don't know why it's kind of fading. That's why it's kind of looking ugly for me to try to label in the lower time frame here. And that's why for this specific one, I just have only one time frame in the monthly time frame. But for the other instrument, we have all the lower time frame as well. But so for now, we can expect for the upside. Now, in terms of what will be in the potential higher, we can, okay, wave 3 here. Anybody knows typically wave 3 where should it go? Anybody familiar with the Elliott wave? Wave 3, typically how will you measure the target from the wave 3? Wave 3 typically in the Elliott wave will be 161.8 extension of the wave 1. So this is your wave 1. This is the starting point of your wave 1. So the way you try to find where the potential target is using this. So you are measuring the length of wave 1, and then you are projecting it from the wave 2 to get what I call the 100%. This is the most popular Fibonacci extension level here. 100%, 123.6, 161.8. So if this is a wave 3, it has a potential to go all the way to 104, which is still 20% from where we are before it finished the wave 3, right? Before it finished the wave 3. Even higher is a possibility. I mean, as a guideline, it's not a rule, right? It's a guideline. As a guideline, wave 3 is the strongest wave and typically can reach to 1.618 extension of the wave 1. So as a guideline, that's what we usually use. So from here, if I want to see the minimum, so what is the minimum target for wave 3? I would say it's 100%, which has been reached. Usually that's how we say it. The minimum is 100%, but it can go all the way to 161.8. Okay, so within the shorter cycle, we might still extend higher before we finish wave 3, but you can see if this is going to be a nest, then it will continue to go up, and if there is any pullback, the pullback will continue to be bought, right? So in order for you to be able, let's say if you want to play the uranium futures UXC, what you need to do is really, in this kind of case when it has started to rally higher like this, you need to find which degree or which wave do you want to participate. Do you want to participate in the smaller wave, smaller degree, and you get in out quicker, or you want to be more like a long-term investors? If you are more like a long-term investors, then you need to wait for a bigger pullback, right? It's like a bigger swing, because you can see within this wave 3 there will be up and down here as well, but you don't see it that much in the monthly time frame because this is a higher time frame, right? But when you go down to the daily, 4 hour, 1 hour, you will see the high and the up and down more in the lower time frame. But like I said, I cannot go to the lower time frame for this specific instrument because the bar doesn't look good. It looks like fading the color, so that's why I just stick with just the monthly time frame here. So let's say if you are long-term investors, then at least I will not participate in all this move up until I see wave 4 in blue here, right? Until I see wave 4 in blue. So wave 4 in blue, if you look at the size of the wave 2, then the wave 4 in blue should be somewhat comparable from the distribution point of view. The size of the pullback should be somewhat comparable. So like for example, if you see something like this is also a little bit of a pullback here, right? But this is like a minor pullback compared to this pullback here, right? It's not comparable. It's not comparable. So wave 4 should be somewhat comparable to the wave 2, and that's something that you have to wait before you consider buying if you are a longer term investors, right? So if you're buying wave 4, you are basically trying to, maybe you hold it for a couple of weeks or months for your wave 5, and then you sell, right? And then you buy again when it is doing wave 4 in the black, because when it finishes with 5 in blue, 1 2 3 4 5, it will finish with 3 in black. And then you buy with 4 in black, which is going to pull back again, and then you hold it until with 5 in black, and then you sell it again. So if you are like a medium term, long term investors, that's what you're going to do with the UXC. Okay, so that's the uranium futures, guys. Now let's take a look at some other things here. So the next one we're going to take a look at is the ETF. Again, I think ETF probably is the best vehicle for you guys to invest. It provides you with a diversified position. You don't need to worry about, you know, which companies I should invest and all those things. You basically get everything, right? Diversified. So the first one is the URA. Again, the URA, it invests in the they do invest in the physical uranium as well, right? So they invest 11% in the physical uranium, and the rest is being invested in the miners. Now, I don't know why the monthly doesn't want to open up for some reasons. Some of these are not really opening up. Okay, here we go. All right, so this is the URA monthly time frame. I have the data as far back as 2011. Not too bad. It's more than 10 years data. Okay, so we got this with 1 here. This is the grand super cycle. Now I think I should have used the super cycle degree here so that I don't run out of, but anyway, the concept is the same. This is grand super cycle. Okay, it finished the wave 2 at $7.21 on 2020. This is the during the COVID-19 scare here. Okay, and from there we are starting a new impulsive rally. The same sort of logic can be applied here. If we break below 2020 again, this will become your first swing, this will become a second swing, and then you measure the target lower using the Fibonacci like this. This is your beginning, this is your first swing, and then you project it from here. You get 100% all the way down. I don't know where the 100% is, but yeah, it doesn't make sense. So basically the 100% will be below 0, okay, below 0, and therefore it won't happen. The 100% is negative 95, so it's not going to happen. So that means you run out of space on the downside, and this is actually your major low in 2020 here. From here, you start a new impulsive rally in the wave 3. Now this is very interesting because if you look at the chart here, right, you clearly can see this rally ended here, and then you got a pretty decent pullback, which is your second swing, and then you are now starting to react higher again, but we have not technically broken above this 2021 peak yet, right? We're still here. Now if we do break above 2021 peak, right, if we do get a break in the future, what that implies then is you have a higher high sequence. That's a bullish sequence. You get a higher high sequence. Now when you have a high high sequence like that, like we talked about before, you are looking for the potential target on the upside, right? For your third swing. Like I said, the minimum target usually is going to be 100%, and then it can potentially go to as high as 161.8 if it is a wave 3. What we are proposing here is a wave 3, right? Because I cannot, like I said, this is unlikely to be APC and then drop again, because it will go to negative number. It doesn't make sense. So it has to be an impulse. So then that means we are doing the projection like this, 1 2, and then this is your potential target higher here, right? 41.9, 57, all the way to 57. Now remember, this is a monthly time frame. Each bar is a month. So that means this is not something that you can expect to happen overnight or even just a week, right? Because each bar is a month. So you can see this with one here, for example. This one was from 2020 March all the way to 2021 November, right? So it is what is it, like a year and 8 months, almost like 2 years move. This move up. So you can expect more or less the same thing from the low of 2022 July, maybe all the way to, you can expect 2 to 3 years from 2022 July, which brings you to around 2024 July, right? 2024 to 2025 July. So that's kind of the investment horizon that you should be thinking about. Okay. So here, once it breaks above this previous peak here with one, which is at the $31.60, then it will confirm that this is indeed bullish, because you have a high, and then your minimum target is going to be $41.90, and then it can go even as high as $57. So current price is 28, so that gives you a pretty decent return, right? 25%. If it goes to 41, if it goes to 57, then basically it doubles from where it is right now, right? Now it has not broken above it, but again, we are calling extension higher in the next foreseeable future, basically in the next decade or so, in the next 5 years at least. This is going to be bullish, right? So is this a good time to basically try to invest in this industry if you believe in it? Because I think potentially it can continue to go higher in the next 3 to 5 years, basically. All right. But that's the kind of the investment horizon we are looking at here with this uranium here. It's not like overnight. It's not like a short-term trading kind of thing, right? Now, of course, if you are the type of person that do short-term trading, you can do that, but then you have to drill down on the lower time frame, and you have to be more nimble. You have to know exactly what you're doing, and that's usually what our service provides the update in the lower time frame as well. Now, actually, uranium is not even officially in our service. We don't actually cover uranium. We're thinking of covering uranium, maybe by removing some of the instrument in one of the groups and replacing it with uranium. But let's say if you trade oil or gold, silver, and so on, we do cover that. And we do provide the short-term analysis as well, and that's for more people that likes to trade more often, things like that. But if you are not those type of people, if you're long-term investors, then it's pretty simple. Direction is up, breaks above here, is going to go to 41 and potentially 57, and that will only be the end of wave 3. You get a pullback first from there, but then it continues to go higher. Overall, the trajectory is continue to go higher. Okay. So if I go down now, this is the monthly, right? I go down to the daily. Here I can see this is the same count, but it has more details because I go to the lower time frame. So if you look at the monthly time frame here and compare it to the daily, I get this wave 2 in black here, right? So this wave 2 in black basically is this starting from this here. This is your wave 2 in black here. So from here, showing the rally to be an impulse. So we got this 1 2, and then you got another 1 2 3 4, and so currently we are within wave 5 of 3, right? Wave 5 of 3. So still you should expect more upside. Now this one requires you to understand Elliott wave a little bit in terms of different degrees of Elliott wave. So this is going to be ending 345 here in this degree here, and then after it finished that, this is what we call a minuet degree, this blue here, and then once it finishes this thing here, it will finish 5 in black, and after it finishes 5 in black, it will also finish 5 in red, and also finish 3 in blue. So then after you finish 3 in blue, you will have a 4 in blue pullback. Now the 4 in blue pullback, the size will be similar to this one, because that's the cycle that it is being correcting. So this wave 4 should be somewhat like this, and then it goes higher again after that to finish 3 in black, and it continues to go up and up and up. So technically you can see we still are nowhere near the major top yet at this point, and we will continue to go up, and if there's any pullback, it will continue to find support. Now I think the idea of an Elliott wave theory is very simple. You need to figure out what the trend is. Now in this case, if you believe the trend is higher, then all you need to do is you actually need to see or to wait for a pullback in which you can find, because remember in Elliott wave, a pullback is always in 3 swing, always. It's always in 3 swing, and then it will always have no extension, because remember it will only extend to 1.618 if it is a wave 3, right? If it is a wave 3, which is an impulsive move, which is the trend, in the direction of the trend. But if it is corrective, it's always going to be 3 waves. We label it SABC, and it's always going to end somewhere around 100% of the A. So between 100% to 161, but shouldn't reach 161, because if it does reach 161, it will become an impulsive move. So that's why in a corrective move we say that this wave 3 needs to end somewhere between 100% and 161.8% of the first wave of this wave, first wave, right? And so that's usually in our service we're going to provide a blue box that is a visual sort of cue to know what the level is in which you can expect some sort of support, right? Now that's why, for example, here, let's say if you are kind of conservative investors, right? If you're conservative investors in this case, I would not try to trade this. I would not try to trade this. I will try to trade this, right? I will try to trade this. So basically you wait for a bigger pullback, right? You wait for a bigger pullback happening like this. Now if you see a decentralized pullback, you buy when this third leg is equal to the first leg. That's what you're going to be doing. That's how you're going to be looking to buy the URA. So it really depends on so you can see it still has a long way to go to the minimum 41.90. Now if you are not trading it, if you're just investing, then actually you don't even have to be so precise. Yes, you will gonna buy one time where you're gonna do a three pullback, a decent pullback, you buy, but you don't need to get out, get in again, get out, get in again, right? Because that requires a lot of analysis, requires a lot of like you have to keep up with the market and so on. But if you just want to buy and invest, then you just do it one time when you see a clear three-days pullback, a decent three-days pullback, then you just buy and just hold it, because you know until it reaches, let's say, at least 41.90, then it can go up and down every single day, but eventually it's going to reach 41.90, for example, right? Or even higher, can go all the way up to 57, for example, right? So that's the URA here, and this is the 4-hour time frame, which is the same. We just focus more on the lower time frame, which is with 3 and the 4, and the move up here. So you can see 1, 2, 3, 4, and then now looking for extension higher to finish this with 505. Like I said, I think this one is a little bit short term. Only if you know what you're doing, you're trading very quickly, and you put stop loss, you calculate position size and all those things. You shouldn't try to trade in the lower time frame at this point, because because it's more risky, obviously. But if you don't have any leverage, in your account, you just buy and hold it. You will never get margin call, things like that. Then I think you just wait for a decent risk pullback and you buy and then just hold it at least until it reaches this 41.90, 57. That's it. And then from here you can decide, should you hold more to finish the 5 waves, or you're satisfied enough, right? Because it's like 20 to 100% basically return, right? Could be enough for you guys. So you get enough, you sell it, and then you try to wait for this before you buy again. When you see a decent pullback, you buy again, and you try to trade the wave 5. That's how to do it. All right. So that's the URA. Now moving on to the URNM. Similar way here, you can see URNM is newer than URA. This is the weekly time frame. I only got all the way back to 2020, so it's only 2 years old, as you can see. Eric Sprott created this ETF 2 years ago. Now you can see this one is pretty similar to URA. If you look at URA, remember from the 2020 low, we also got this 1, 2 here, right? This is 2020 low, so we got 1, 2, and then now trying to break above that peak. Now if you look at URNM, very similar. This one 2020, you got this 1, 2, this one here, clearly 5 waves here. Look at this 1, 2, 3, 4, 5. That's the direction of the trend, 5 waves, right? 1, 2, 3, 4, 5. Look at the pullback, clearly 3 waves. Now if you measure this extension W, X, it doesn't even hit the 100%, so it's very weak here. It's very weak because even the third swing is supposed to reach 100% ideally. Even this one didn't hit the 100% and already starting to reverse. Now this one, guys, is almost breaking above the 1 again, right? Almost. Now this one is faster moving. Like I said, URNM is going to be faster than URA because URA includes the physical uranium. Now, this one is also pretty close as well, but I for some reason I thought this one is closer to break compared to the URA. Right now, a break above this peak here is also the same implication. That means you get a high sequence from 2020. You finish here. That's your first leg, and then if it breaks above your wave 1 again, then you project it from your second, which is the end of the correction, and then you look for 100% to 161.8% target to the upside, which is $71.40 all the way up to 19.8, right? So current price is 48, so it's almost like 100% and even more than 100%, right? So very potentially it can be a big mover, right, in the next years or so. So here we are calling for more upside. Again, a break above this peak is going to confirm and it's going to validate all this view. Now the thing is about Elliott Wave, there's always going to be alternate view. The alternate view, for example, is until it breaks above this peak, we can always do another double correction like this. This is what we call double correction. So then I shift the W here as my first leg, and then I shift this one as my second leg, and then this is my third leg, which is going to be equal to the first leg to end the wave 2. So technically that option is always going to be available no matter what, right? So because Elliott Wave is not mathematics, it's not like 1 to 1 must be equal to 2. This is a forecast, right? So forecast is based on probability, and probability wise it looks more likely to extend than to do something like that, and that's why we are calling it this way. But until it actually breaks above here, we cannot completely rule out the possibility of a double correction. Break above will validate the view, and it's going to extend higher to 71 to 98 here. So here we are in the process of ending this wave 3 from here. So 1, 2, 3. From there with 4 and with 5. So if you want to trade, depends on how, like, your time horizon. You can either trade with 4 or you can trade with 2. If you trade with 2, it's going to be a longer term sort of trades, right? A longer term trades, because that one will basically carry you, until wave 3, which is pretty long. But you can also trade with 4 as well. I mean, you go down to the lower time frame. Now I wouldn't trade this, all this little move, right? That will end with 3 in blue here, like what you see in the weekly time frame. We can have a little bit up and down here for the next few weeks. Maybe this wave 4 is not going to happen until next year, because we're almost at the end of the year right now, right? So yeah, so wait until next year. When you see the pullback here, wave 4 should be, from the size, from the distribution, should be kind of similar to the wave 2, right? It cannot be that you know, like this one, for example, this pullback is not comparable to this pullback, right? So it has to be a little bit bigger pullback here to be considered to be wave 4, right? And we can when you can see a third pullback, and that third pullback is a decent pullback, third swing equal first swing, you can buy it for one more push higher, and then you buy again in this wave 2, you buy again in a bigger 3 waves again, you buy again from the next leg up, and you keep buying any pullback basically, right? You keep waiting for opportunity to buy, and you wait for this pullback, you buy it from the next leg up, and the target on the upside minimum is going to be this 71, and it can go all the way to 98. So here in the daily time frame, like I said, it can extend a little bit higher even in the shorter cycle. So shorter cycle only for those who know what they are doing and those who like to trade in and out more often. That's when you go to the 4-hour time frame, 1-hour time frame to do that. You need to be able to know how to calculate position size and put stop loss and things like that. If you are trading, if you are investing, you don't need to care about all this thing. You just need to figure out where you should be trying to buy, and then you can hold it until certain target is being met, right? So like I say, if you are investors, best way is waiting for wave 4 and then trade with 5, which is going to be a pretty decent trade, and then you buy again with 2 for the next big move on the upside. If you're a trader short term, then you can try to trade all this little swing here. If you can see a clean 3 pullback in the shorter time frame, but again, unless you know what you're doing, then I don't recommend people doing that. Okay, so that's URNM. Let's go to the chemical right now, which is the stock here. We are going to the miners right now. This is CCJ monthly time frame. We ended with 1 here, and then we got a WXY double zigzag ended with 2 here at 2020, which is a COVID-19 low again, $5.30. Since then, it has rallied tremendously here, almost near the previous peak here. Imagine it lost 90%, guys, from 55 all the way to $5. That's how crazy it is, right? It lost 90%, but then from $5 it rallied back almost towards the all-time high again, $45. So that's how crazy it is, the market. It's a boom and bust cycle, right? And it is in the boom stage right now. So it is gonna be a good opportunity, like I said, if you're thinking about 3 to 5 years down the road. So here in the rally here, same logic here. It cannot possibly break below 2020 again. You ran out of space on the downside. It will bankrupt the company. If it goes to another like lower, it's going to go to 0. So it's not going to happen, right? So then the only alternative is that this is actually a new bullish leg, and it's going to break above this previous all-time high. It's going to be in the wave 3. It's going to go all the way higher, more than the $55. So from here we got this 1, 2, right? You got 1 as a 5 waves, 1, 2, 3, 4, 5, ending with 1. You got wave 2, and you are now within wave 3 in the black. Black degree is called primary degree here. Now within wave 3 in the black, it consists of another 5 waves subdivision in the lower cycle. So you got 1, 2, and we're still only within this wave 3 of 3. Very powerful move. This is the strongest phase of the move, wave 3 of 3, right? So we can expect continuation higher here in CCJ, and any pullback is also going to be finding support every single time if you can see a clear 3 waves. So here I think we should be close to ending this wave 3. So you get 1, 2, and then now close to ending wave 3. I can already count 5 waves here, and I can already see some divergence here in the momentum. Typically that is indication that this is already in the wave 5 when you have a divergence, meaning price makes new high, momentum as measured by RSI, relative strength index, doesn't make a new high. So this is typically suggesting, okay, it's lacking momentum in this move up, and therefore soon can finish with 5 and then see a bigger pullback. So that bigger pullback here is going to be an opportunity to buy CCJ, this with 4 in the red here. So the size of the pullback should be similar to this one, right? So you should know what kind of pullback it is, because if it is only this kind of pullback, that's too small. It's not like the with 4 in the minor degree. It should be similar to this one. So you wait for there is pullback similar to this size, and then you buy when the C equal to the A. You trade from the with 5 to the upside, and that with 5 in the minor degree, which is the red color here, is going to end 3 in blue, which is intermediate, and then you can buy 4 in blue again, trade again with 5 in blue to finish 3 in black. So it will continue to go up in a staircase like what we're showing here. It will finish 3 in red, 4 in red, you buy 4 in red, getting out at 5 in red, buy again 4 in blue, getting out again 5 in blue, because this 5 in blue here is going to be ending 3 in black here. And then you're going to have 4 in black, which you buy again, and it's going to make another leg. So it's going to be going up, but in a staircase, a sequence of 3 4 3 4 3 4, and it will keep going up, right? And the biggest pullback is going to be when you end the entire 5-way move from here. So when you end this black 1 2 3 4 5, that's when you got this entire move from 2020 complete, and then you will correct in a bigger 3 waves to correct this entire move like this. So typically when a cycle ends, you can correct the cycle going, let's say 50% correction is pretty common when a cycle ends, right? 50% correction is common. So only when it finishes the entire 5-way move, only then you will see a bigger pullback to correct the entire rally from 2020, which is still bullish. It will correct a bigger correction going to happen, but it's still within a bullish view of the market, right? So in the intermediate future, the focus then is going to be simply your with 4 here and with 4 here, at least 2 more times. You can buy with 4 here, with 4 here, and you get out when it reaches, when it makes new high in the with 5. This is the daily time frame. We talked about it before. This is the 4-hour. It's the same idea. We should be finishing with 3 soon. So I don't know if I want to play in the shorter cycle here. But if we can start seeing the bigger pullback, like I said with 4, then we can start looking to buy in the dips here. All right. So finally, let's see what else we got. The next gen here. This is the weekly time frame of the next gen. Now this is very interesting here. This is the weekly time frame. I can get data all the way back from 2013. So I'm counting this as a 1 2 and then another 1 2. So this is within with 3 in the super cycle, and then we got this 1 2. Now I think what's interesting here is that it has already broken above this previous peak here. This peak here is to $6.18. Current price is $6.90, the high. So it's already broken above the previous peak, which is basically the same concept that we talked about before. You have a sequence of high from 2020 already. Now you haven't had it in the URNM and URA, if you recall. We are waiting for that breakout. Now this specific stock, next gen, already broke above that same peak, because we started from the same low around 2020. This peak is around 2021. If you compare this peak, you look at the date, which is November 2021, right? The date is here, November 2021. If you compare this to the URA, this peak here is also November 2021. Look at that. So it's the same peak, around the same month and the same date, right? And so that means NXC might be one of the leading stocks in this breakout, because it already broke before the ETF breaks, right? So here, how do you measure potential target higher? Same thing. So this is your wave 1. You project it from the wave 2, and then you got the 100%, 161.8. Alright, so the minimum for wave 3 is always going to be 100%, but more likely than not, it's going to be more than 100%. So it can go all the way to like 1.618, which is $13. We are now at around $7, so that will be 100% move up, potentially 100%. Might not hit exactly 161.8, but the potential is there basically. All right. So here, same thing. Pullback is going to find support. At this point, I think I can already count 1, 2, 3, 4, 5, and also we have a divergence already here. So I think at this stage probably it's too late for you to try to chase this. But if you can get a wave 4 in blue pullback, this type of pullback, then yeah, that's basically your chance to buy NXC. I believe it will only happen next year, maybe first quarter next year, maybe. Then you can try to buy that. A 3 years pullback. The degree should be similar to the size of this wave 2 pullback here. If you can see a clear 3 years pullback, you buy it, and then you hold it for one more push to finish your wave 5. And then once it finishes your 5 waves up, it will finish with 1 in the higher degree here, and then it will correct this entire 5 waves move from 2022. So the correction is going to be correcting this entire move, so it will be a bigger degree correction, maybe something like this, because it's correcting this entire move. So I'm just using eyeballing around 50% correction of this, somewhere around here, right, or maybe less. Now it's not, I mean, like, this is just it's a guess. It's kind of like rough ideas, not exact level, right? And then after you finish this 3 years move here, this 3 years pullback in the wave 2, you're gonna rally again. It's gonna continue higher. So for the next gen, then basically your chance is gonna be buying this for one more leg, and then buying again here for the big leg higher next year. So those opportunities gonna happen next year. This pullback, I don't think it's gonna pull back this year. We're almost the end of the year. Usually we run out of liquidity by the third week of December. So yeah, so this should be happening next year. Okay guys, so with that, I think we finished all the presentation today, guys. If there is any question, do let me know before we end the session. This session is recorded and it's going to be posted in our website if you want to review again, and you all already have the handout as well, so that you can review it as well. Okay, you're welcome, Dimitri. All right, so if you want to, where's the handout? I attach it in the handout. I mean, if I presume you see a window like this, so you can see there's a handout tab here. So if you can expand that, so maybe you can see the handout. UROI? What do you mean UR? What is that? Is that another symbol? You're welcome, Gary. If I want to be an analyst like you, do I need to go to university or not? Now, honestly, nowadays, anybody can learn with the resources available in the internet, or even like service like us, right? So technically, you don't need to go to university. Like technical analysis, the university doesn't even teach you that. So technical analysis is a branch of analysis that is kind of pretty. It's a combination of an art and a science. It's not like a math, but to me, this is like playing chess, right? Oh, it's a uranium royalty, right? Yeah, I don't have it included in the list of instrument, but that should also be one of the candidates, Michael, if you want to be investing in uranium. uranium royalty ETF. I can check it very quickly to see what I see. Are you welcome, John? Don't you think it's late to join the uranium party? No, not really, because I don't know like at what point you join this presentation, but I actually give you a target for many of the instruments we cover, right? And I give you the target, okay, because it creates a bullish sequence. If it breaks above this peak, then what will be the minimum target, what could potentially be a realistic target on the upside, and so on. So it's not too late at all, especially if you are looking at 3 to 5 years down the road. It is not too late because we are just getting started. We are not even starting. I mean, we are only maybe in the second or third inning, so still very early. You're welcome, Michael. What do I do if two or more chart predictions are mutually exclusive? All right, so let's answer some of the question here. I'm gonna take a look first on the UR. Is that UROI or UR0I? 0Y. UR. Yeah, is it O or 0? Because let me see. I'm using O now. Let's see if it. Okay, letter O. Yes. All right, here we go. So I think it's the same concept here, but this one is kind of lagging. You can see this is the same 2020 low, Michael, that we saw everywhere is the same. Whether you look at the ETF, URNM, URA, or the actual stock like CCJ, NXC, they all bottom in the COVID-19 low, right? And then this is the same high, November 2021. Look, same, right? It's exactly same thing. And this is the secondary low, but we are still nowhere near breaking this one. Whereas the URA, URNM actually is close to break, somewhere around here, and next gen energy NXC is already breaking above this one. CCJ is even higher than next gen, right? CCJ, you can see right here, already breaking it a long time ago. If this one is the leader, this one is the leader. It has already broken a long time ago. So this one looks to be lagging to me, comparatively speaking. So in terms of the investment, then it looks to me it's not as good compared to the others, right? But potentially, if we expect the same, that everything extends together, then potentially, for example, if I measure the extension here, this is my first, this is my second. If we can break above here, which is 5.8, you can be looking at the 7.3 on the way to 10.6 as your potential target on the upside. Okay. No, you don't need to wait until a bigger pullback, right? Like for example, depending on which one, like NXC, I think NXC you can just buy this with for one push higher, and then buy again with 2. This one is the bigger pullback here. This one probably second quarter of next year, probably this one, second quarter of next year. This one first quarter of next year. This is probably second quarter or third quarter, not sure, right? Like timing is always going to be the most difficult to predict. But I'm just giving you a sort of rough estimate, right? All right, so what do I do if two or more charts predictions are mutually exclusive? Typically, unless you are looking at two different industries or like a company that is really not comparable. Like for example, if you are looking at the leading miners, you're looking at CCJ, NXC, they are typically the same. But if you are looking at junior miners, right, junior miners that they are still drilling, they don't know if they have they can find uranium or not. Now those, you need to be a bit careful when you're comparing, right? But if you're comparing, let's say, the biggest miners like CCJ, NXC, and you're comparing this with URNM, URA, pretty much they are more or less the same. But if you're comparing something like junior miners, then I think the result or the outcome can be very different, right? So typically in the same industry, especially if you're comparing similar things, they tend to be doing the same thing, right? They tend to be doing the same thing. Now in terms of the uranium, I'm looking at the NXC and CCJ as a guide here. Like CCJ is already leading the pack by breaking on the upside. This one is already leading a lot more than the others, but NextGen already joined in the party by breaking above this, and soon you will see URNM, URA also joining the party as well by breaking above this previous peak, and then again you're going to be targeting the 100%. Now if you are investing in the URNM, for example, which is the miners, versus you invest directly in the stocks, the return might be a little bit different, right? Because again, those ETF are diversified, so you are investing in a bunch of many companies, whereas if you pick only one stock to invest, then it really depends on your luck, right? If you happen to pick a really good one, then maybe your result is better than if you are diversified. But then of course, if you pick specific stock, you will have more risk, right? So I think if you want to buy specific stocks, what you can do is you look at the composition of this URA and URNM, so that you can get some ideas what are some of the companies that they invest, some of the biggest allocation of their funds. And then so if they allocate a lot of a high percentage on specific stock, usually that stock is a solid stock, a solid company, a big company that it will not go bankrupt or something like that. Whereas if you look at all these junior stocks, then yeah, your return can be astronomical, the junior stocks, but then at the same time the risk is also very very high, and it may not even participate in the move up if they don't have any product, right? For example, if they are still exploring and in the discovery stage and things like that. All right, guys. So thank you very much. So yeah, Abdi, you can always contact us, but we are kind of running out of time, like half an hour late here. And I appreciate all of you coming here, and I'll see you guys again next time. And again, the recording is gonna be available in our website sometimes next week. All right, have a nice day and have a good weekend to all of you.